All right, let's go to some of the details for the movers in Toronto. Bloomberg's equities reporter Stephanie Hughes joins us now with that. Stephanie, what's going on with AGF? Shares moved today. Last time I looked, up over 6%.
Yeah, that's right, Morella. In fact, they hit a peak of nearly 8% of a gain at their highest point today, and that's contributing to an ongoing rally that started late last year that brought the stock price to its highest level since July 2011. And that's because, so it's been nearly 15 years since we've seen the stock price actually trade at this level, which is pretty impressive. And that's because the investment manager's EBITDA, or earnings before interest, taxes, and other adjustments, came well ahead of what analysts were expecting. So there's also quite a bit of earnings per share strength compared to a year ago. Analysts are broadly saying that this is thanks to some massive gains in the AGF Capital Partners business, and that the mutual fund flows of $276 million really just blasted past expectations. Jefferies analyst John Aiken and his team said that they believe this actually really underscores the value of the business, but it hasn't been fully reflected in the valuation yet, which is pretty incredible. So AGF share price is actually a far cry from its peak back in 2007. But it has been on a slow crawl upward since late last year, and developments like this are really adding to that progress, Morella.
Okay, let's also get to Metro. We talked about how it reported earnings today and admitted 2025, of course, was challenging for the company. What else did they share?
Yeah, that's right. So from one earnings report to another, Metro having a bit of a rougher day today. Those shares fell by nearly 8% at its lowest point, which marked its biggest intraday decline since November 2023. It spent most of the day as one of the worst performing stocks on the TSX and dragged the share price down to October levels. That's because Metro, the grocery store chain, its first quarter earnings fell short of what analysts were expecting. We had some input from people like Scotiabank analyst John Zamparo, who said that most of the miss was driven by depreciation, taxes, tax rates and interest and other issues that kind of weighed on the results. But he also added that the expected softer same-store sales growth and gross margins are probably what investors are going to be focusing on the most. And you could probably see that reflected in the share price. That, and management also commented that they're dealing with a challenging economic environment that's weighing on the outlook. So that's contributing to investor fears that they're just navigating a more competitive environment, and also with the higher square footage growth. Given the headline miss, even before the market open, analysts said that they were expecting some softness in the share price. And Morella, that's exactly what we saw today.
All right. Want to keep an eye on Bloomberg. Stephanie Hughes reporting there. Thank you for that.